Hello everyone, welcome back to our YouTube channel. We are PGN Accounting Group, and today we're giving you an update on the 2023 tax changes. There's huge tax changes that are happening because of inflation that's been crazy the last year and a half to 2 years because of all the spending that Congress has been making. And now the IRS, they're making huge tax changes to the income tax brackets, to retirement plan contributions, and the standard deduction, some others that we're going to be going over in this video. But before we get into the content of this video, please hit the subscribe button, follow us on Instagram, and if you want to make an appointment, now it's tax season. We're starting to get booked and we're starting to get really busy, but we still have some room for new clients. If you want to make an appointment, please go to pgnaccounting.com and book your appointment ASAP. Now into the contents of the video. We're going to start with federal income tax brackets and the changes from 2022 to 2023. I'm going to go through this pretty quickly, but if you want to pause the video and take a deeper dive into this, please pause the video now. There's been some really big tax changes to the actual brackets of what income levels are taxed at which brackets. However, there is no change to the actual tax rates. So the tax rates are still 10%, 12%, 22, 24, 32, 35, and the top bracket is 37% for federal income tax. For married filing joint, you could see for 2022, for any income between 0 and $20,550, it's taxed at the 10%. And then the next level up to $83,550 was taxed at 12%. And then up to $178,000, it's taxed at 22%. But that's not on the full $178,000 isn't taxed at 22%. It's the first $20,550 is taxed at 10%, and then the next income $20,551 to $83,550 is taxed at 12%, and then from $83,551 to $178,150 is taxed at 22%. So the way our tax system works is we have a gradual tax rate. So as increase your income, then that income gets taxed at different rates. And that's what our brackets have. And one day I'll make a video explaining the way our tax system works. But that's out of the scope of this video. We're just going over the tax changes. So since inflation has been crazy, if the IRS didn't change these brackets, which they do almost every single year, but they usually change it incrementally instead of a huge jump like they did this year. This year, they're increasing it by 7%. So the first bracket used to be $20,550. Now it's $22,000 for married filing joint. That's taxed at 10%. The next level, up to $89,450, is taxed at 12%. They used to be $83,550. The next level is $190,750. is taxed at 20%, where it used to be $178,000. So these are huge jumps. And the reason why, again, is because of inflation. Yes, the IRS increased it by 7%, but inflation is way higher than 7%. So they're not really being fair on this, but at least they're doing something for us. Because if they didn't update these brackets, that means that we're making more money, but we're taxed at higher rates if they didn't change these brackets at all. But thankfully, they updated it. So this isn't really going to make your tax refund increase or decrease from 2022 to 2023 because they are updating the brackets. They're increasing the brackets. So don't expect a large difference between what you're getting for 2022 versus 2023 for a federal tax refund. And then you could see here, if you want to pause the video, the tax changes between 2022 to 2023 if you're single or if you're filing head of household. Also for 2022, another tax change is the increase to Social Security tax threshold, income threshold. It used to be you are taxed 6.2% up to a maximum of $147,000 of your income for 2022, which resulted in a max Social Security tax of $9,114. That is changing for 2023. So now you're going to be taxed 6.2% up to $160,200, which results in a max Social Security tax of $9,932. Again, this is for high income earners. What this means is if you're making over $147,000 in 2022 or over $160,200 in 2023, any income above these amounts are not being taxed that 6.2%. There is a maximum that you're going to be taxed for Social Security. For retirement contributions, this is a nice one because we're actually able to increase the amount that we're putting towards retirement. So for 401ks and 403bs, the amount used to be $20,500 for 2022. And now that's getting increased to $22,500. So that's a substantial increase of $2,000 from 22 to 23. And if you're able to make a catch-up contribution, you're actually able to make up to $30,000. You're able to make up to $30,000 of retirement contributions to your 401k. As opposed to last year, you were only able to make $27,000 of retirement contributions to your 401k. Also, SEP IRAs, now you can make $66,000. For SEP IRAs, for those that are self-employed and want to contribute to a SEP IRA and that are eligible depending on your income levels, you're able to make a maximum contribution of $66,000 for 2023 as opposed to $61,000 last year. For Roth IRAs and traditional IRAs, now you're going to be able to put up to $6,500 for 2023. That's an increase of $500 from last year. And if you're eligible for the catch-up, then you're able to put a total of $7,500 into your Roth IRA or traditional IRA as opposed to only $7,000 last year. So start maximizing your 401ks if you're eligible, because now you're able to put even more away for retirement and hopefully retire early or just have a really nice nest egg and you can retire whenever you want. For those that qualify for the Earned Income Tax Credit, this is an example of taxpayer that has 3+ qualifying children. For those that qualify for Earned Income Tax Credit, it's usually the low income earners with multiple kids or a single kid. There's different requirements for who actually qualifies for the Earned Income Tax Credit, but for this example, if the taxpayer has 3+ qualifying children, last year in 2022, they were able to receive $6,935, but now that same taxpayer with the same amount of kids is able to receive $7,430, about $500 more as a tax credit, which reduces your taxes dollar for dollar in 2023. So that's pretty substantial. Now they're getting an extra $500. And one of my favorite tax strategies, the health savings account, the triple tax advantage account. I've talked about it in my other videos where it's the top 5 write-offs for W-2 employees. Please go watch those videos if you want to get a little deeper dive into the health savings account. I'm not going to be talking about it too much here and what it is, but the amounts that you were able to contribute have also increased from 2022 to 2023. If you have coverage for yourself only, then you're able to make a max HSA contribution of $3,850. If you're eligible for the catch-up, now you can make $4,850. If you have coverage for the whole family, then you're able to make a maximum contribution to your HSA account of $7,750 as opposed to only $7,300 last year. Again, if you're able to make a catch-up contribution, that amount is now $8,750 as opposed to $8,300 last year. So again, I'm a big advocate for contributing to your HSA. Even if you're only by yourself, it's a great tax strategy. You're going to be able to save a lot of taxes. And also, we all have medical bills and you're going to have to pay for it anyway, so might as well contribute to your health savings account, get a tax deduction, and then pay for your medical bills with your HSA money. Again, I'm not going to talk about it too much, but go watch my other videos for the top 5 write-offs for W-2 employees, and I talk about it a little bit more in depth there. For 2023, the increase also applies to the annual exclusion for gifts. What this means is an individual is able to give to another individual up to $17,000 in 2023 and not have to include it on a gift tax return. And the person giving the gift does not have to pay any gift tax on it. As opposed to last year, this exclusion was only $16,000 per individual. Briefly, what this means is if I decided to give $17,000 to my mom, $17,000 to my dad, $17,000 to my sister, and $17,000 to my brother, I'm able to exclude all of those because it meets the $17,000 exclusion threshold per individual that I'm giving money to. So this exclusion doesn't apply for the aggregate amount of gifts I'm giving, but the total amount I'm giving to just one person. So you're able to exclude $17,000 of gifts to one individual. And if you're married, then you each have $17,000 of annual exclusion for gifts. So if a mom and dad want to give $34,000 to their son, to their daughter for maybe a wedding, they're able to exclude the entire $34,000 from having to file a gift tax return. Now on to standard deduction. Most Americans that file tax returns actually claim the standard deduction as opposed to itemized deductions because the standard deduction is such a high amount. And it's getting even higher in 2023. So if you're married filing joint, that amount is going from $25,900 in 2022 to $27,700 in 2023. For single, the standard deduction used to be $12,950. Now it's $13,850. And for head of household, it used to be $19,400. Now it's going to be $20,800. So this is really good for those that are implementing my other strategy of how to hire your kids in your business and get a huge tax deduction. Now you're able to pay your kids up to $13,850 per year per person, and they won't have to claim that. So go check out that video as well to see how you could get a business tax deduction for paying your kids, and your kids won't have to claim that income on their own tax return. So great strategy right there. But if you're just claiming the standard deduction for your own, this is really useful because now you're going to get almost $2,000 more of a standard deduction to reduce your taxable income. Thank you for staying tuned all the way to the end of our video. Again, we really appreciate all of the support that you guys give us, whether you're subscribing to our YouTube channel or you're following us on Instagram. Please share it with your friends and your family, especially if you found it useful for yourself. And if you haven't subscribed, please subscribe. Please follow us on Instagram. It really means a lot to us, and we really appreciate your support. We are starting 2022 tax season right now, so if you do not have a tax preparer or a CPA, please go to pgnaccounting.com and book an appointment with one of our CPAs today. We will see you guys on the next video. Thank you and take care.